You know, one of the things I talk about here in these webinars is this idea of pip movement ranges. And pip movement ranges are something that can be measured pretty easily with a single tool that's built into the version of MT4 that I use. It's a tool that is offered to clients of, or I should say brokerages that offer auto chartists, and it's a tool that's called PowerStats. Now, I think probably just experience teaches us a lot about the rhythm of the trading day and where the activity starts to increase and decrease. Imagine just a 12-hour difference in time between the hours of 8 a.m. and noon Eastern Standard Time and 8 p.m. and noon Eastern Standard Time. Just 12-hour difference, but it's a completely different part of the world that's involved in the market. So consider 8 a.m. to noon, just for a moment. You've got Frankfurt already well underway. In fact, it's midday, afternoon for them. Same with Paris. Same with London, the 800-pound gorilla in the Forex trading world. And the U.S. is starting to come on. So you've got really the two most significant areas, or I should say the four most significant financial centers in terms of turnover getting active. Okay? Between 8 p.m. and noon, you've got, again, financial centers that are getting busy, getting active. Auckland, Sydney, Tokyo, Singapore, Hong Kong. They're all getting busy, and certainly the Asian session is not one that is illiquid. I mean, there's really no such thing as illiquid in the Forex market anyway, right? But the turnover is significantly less. I mean, consider that the combination of Europe and the UK account for nearly 40% of daily turnover, while Asia is actually less than 10%. Now, I pulled these numbers from, if you've ever read the report, or there's usually nice synopses out there too. The Bank of International Settlements. And they put out a report every 3 years, and you can check that out. So let me go ahead and put this tool up here. So I'm going to go ahead and go into the navigator. And it's called PowerStats. And again, this is a tool that's free to typically customers or brokers, again, that have auto chartists offered to their customers or clients. This version of MT4 is the Interbank FX version. So once you activate the tool, what it's going to do is outline, or I should say kind of give you the support and resistance based upon time. Now, I don't know how many of you thought about support and resistance based upon time. I don't know of any way to manually do this. This is one of those quirky tools where I'm sure you can calculate it on your own in some form or fashion. But the time it would take to do it across the 15, 30, 60, 40, and daily and multiple pairs just makes it unrealistic for people to use intraday and calculate it on their own. Okay, just like we could probably calculate stochastics and MACD histograms on our own, but it sure is a whole heck of a lot easier when we have our charting platform do it for us. So one of the things that I want to just mention is most of my tools that I've used in the past are tools that I think you could more or less set up manually. I've kind of likened a lot of my tools to a manual transmission, but you could automate it. And that's what I like to do. Chart patterns, support and resistance, But a lot of these indicators are simply too time consuming to calculate manually. And I think Power Stats kind of falls in that indicator segment. All right, so let me see if I have a chart with this already laid on here. I will admit that this morning I was just kind of in a rush to get to my charts and take a look at some trades I had on, and I did not restart my computer, and it sure is letting me know on how unhappy it is having not restarted it. Yeah, I don't seem to have one active right now. Yeah, unfortunately it appears that it's just being cantankerous, or it's my PC this morning. But in the meanwhile, I got a question about the yen, so let's jump on over there, and then I'm going to also bring up the standalone platform of the auto chartist and show you that, because there's another way you can pull it up. It doesn't have to be an overlay, although I love doing it that way. I love the overlay aspect of it, but we'll look at it in an alternative way here just in a moment. Okay, so what's up with the yen? Okay, that's the question here. Is there a word of intervention? You know, I try to get an idea of what the overall sentiment of a market is, but I don't try to let the fundamentals drive my trading. So if I was looking at the chart, it's not a matter of what I think is going to happen. And we always have, surrounding the yen, some kind of potential intervention. And we have for months. So I know that's in the back, it's on the back burner. Excuse me. But what we need to remember is that unless we see it's being discounted, do I think that we're going to continue to hover along this level? You know, one of the things that I mentioned after the first intervention was that it appears that the Bank of Japan has shown their hand, and they've pretty much told the market where they're going to step in and where they'll let the market float around. So with the exception of a couple wicks here and there, take a look at where the line in the sand has been drawn. I think if we establish resistance below this level on the euro yen, on the dollar yen, let's see what that level is on the euro yen. Okay, so look, we really, here again, this is a perfect example. There really isn't the measuring stick for intervention on the euro yen. The euro is just weak, and I don't think the Bank of Japan's as concerned about, they can't really do anything about the weak euro. They can do something about their strong yen. So, take a look. This is a line in the sand. If the dollar yen drops below that, I think traders worldwide know that there is potential for intervention again. And I don't think you need to be a fundamental expert. I don't think you need to even be a Bank of Japan, follower to understand that after the first intervention, traders are now fairly certain, and this has been since mid-July, right? They're fairly certain that if we drop below that level, they'll step in. So we have broken it from time to time. But what happens here? The bears get nervous. The shorts get nervous about being squeezed again. So and we're going to try this, right? Like little children, we're going to try to break this because the yen is still very strong. And you look at what's been happening to the Dow, and I'll pull that up in a moment. When you see what's happening to the Dow, it makes sense as to why the yen has continued to move. Think about what's left of the safe havens. The franc's out as a safe haven, right? So Let's head back on over to the yen. So that's the line in the sand. So do I see intervention here? It's in the back of my mind. It's not being discounted on the charts. So do we have a bottom in place? It looks like we do. We're going to continue to test it. And here's the thing. If we test it and we start to find some momentum or some resistance at this level, in other words, prices get down below it and then it becomes a ceiling, I believe people feel that the Bank of Japan is more likely to step in again. That's my take completely on the yen. And when the yen is in this area, in this price area, I will tell you, it becomes a little nerve-wracking to trade on anything more than a very short-term time frame. So, it's a little bit more, again, it's a little bit more nerve-wracking to start trend following the shorts when we're so close to where that 76.70 level, where the BOJ could step in. Okay, so I actually have not been doing a lot of active dollar yen trading in this area. I think it's easier to trade the euro yen right now. All right. So I got a question about the euro US dollar. Let's head on over there. Start with that daily view, and the question is 15-minute possible trade setup for me. Okay, well, one of the things that I did outline Monday and Tuesday was the 4-hour setup. So let's start with this daily chart. Directional bias is certainly down, so that does open up the 4-hour swing short. Had the daily chart not been moving in a bearish directional bias, I would not have the option of a swing short. Okay? On a 240. So the 240 I liked for its clarity. It had a nice 4 to 6 o'clock downtrend, and it was benefiting the bounce. And let me tell you two levels at which I was getting short. The initial bounce to the 20 period simple did work for a little while, and it moved right back down for some time. And here we are moving up again towards my more conservative level. Now, admittedly, the area between the 20 period simple and the 34 EMA low is a wide one. It's a wide area. Okay? So remember, at the 20 period simple, which is always aggressive, we got to remember that we want to keep a very, very small position. We just want to taste. We just want to get involved, engage the market. But the conservative position is going to be taken up here along the 34 EMA low. That's the more conservative correction. It's a much more substantial retracement. Okay? What's been benefiting the euro period? Why has the euro been moving up? What's going on here? Well, consider the news that came out. I mean, the initial bounce started occurring because of that rumor that the Chinese were being wooed to buy Italian bonds. And it was a lot of hope, and it was maybe some expectation, and we had no numbers, we had no concrete evidence that this was actually going to happen. This was obviously a buy the rumor, sell the news type scenario. Now, we got the buy the rumor part. Will they sell the news if it actually happens, or not? We're due for a correction in this market. Any downtrend, any uptrend for that matter, okay, are due for a correction, okay? One of the things that we got to remember when we start mixing technicals, and I'm just kind of scouring another page on my screen, by the way, looking at different news tidbits to see if there's an angle that I'm not seeing, if there is some kind of news that is going to affect the market, but right now I don't see anything that's new. All right. I think this is a lot of optimism in terms of the, let me head back over to the euro. I think this is a lot of optimism that's carrying this pair higher, but it's carrying it higher, and I need it to be carried higher in order to engage the short sell, right? So I got to remember that this serves me. If I didn't have this correction, there's no way I'd be able to look at the conservative short sell. And again, that was one right there, and then there was another one down here. Again, 20 period simple and 34 EMA low. Okay, so the 240 is one that I'd pay attention to. The question here was about the 15. So let's make sure that we understand that we're looking at an overall bearish directional bias. We are looking at a 240 conservative swing short that is triggering now. But the question is about the 15. So, having said all that, within the context of this longer-term intraday correction, time frames like the 15 and even the 30 have transitioned into uptrends. A shallow and fresh uptrend on the 30, but a little bit more established on the 15. Okay, so even the 5. The 5 is going to be very important here in just a moment. I'll explain. So look at the 15 for a moment. What's the first thing that you should think about when you look at the 15? It is a counter trend trade. Now, when I define the word trend, when I'm talking about counter trend or trend following, that determination is always made off the daily time frame. Period. Always. Okay? So this is counter the dominant trend, the psychologically relevant trend on the euro US dollar. It's counter that. What's another thing to consider? Well, it is pulling back into the wave. So just as I had the 20-minute and the 20 period and the 34 period EMA low in the downtrend, within the context of the uptrend, I've got the 20 period simple and the 34 EMA low, basically kind of overlapping in a similar area, and I've got a potential swing buy situation here. Now, do I mind getting into this trade here? Well, it is a valid trade. It is triggering right now in terms of a buy, but I have basically a conflict. I have a time frame conflict. I have a trade entry conflict, and that is, on one hand, I've got this 240 pretty much right now triggering the swing short. I've got the 15-minute triggering the swing buy. Now, if all things were equal, and by equal I mean if the clarity of the market trends were equal, and I can say that both trade setups are good, clean trade setups in their own right, for the most part, I'm going to go with the longer-term time frame, especially knowing that it's following that overall dominant trend. Okay, so when I have two trades occurring on two separate time frames of the same pair, same symbol, period, simultaneously, again, the decision has to be made as to which to take. Now, a lot of times you'll get a one thing leads to another scenario in that we could have been still reaching for the swing short on the 240, and I could swing by the market up to that level. I love that scenario. One thing leads to another. In other words, the momentum of the 15 or the 30 and the trades there lead us into a second trade. We don't have this here. Okay, at this point, they're pretty much overlapping within a small area. Okay, so this is not a one thing leads to another scenario. However, I do have to make a decision. Now, I think the easier decision is to just say, I'll go with the trend follow. Okay, that would be the easier decision. I think the more difficult decision is now, does the 15 have the ability to go up to these prior highs here? Let's say this level right about here. Okay, and it's shy of the 3750, so don't gun for the 3750 major cycle level. you're probably looking more along 37.40, okay, before you start running out of bullish momentum. As that's what the past price action is indicating. Okay. So is it worth it? It's on its way there already. So this is kind of a situation where the trade triggered. If you took it, great. That's your upside target. But I'm talking about as it was pulling back, whether or not you take it to begin with. Okay. I think there's probably a pretty good chance that we'll probably reach this 37.38, 37.40 area again. And from a risk-reward standpoint, it was probably just fine to take because there's your risk-reward. Just look at the space between entry and the profit target, entry and your stop loss, and you'll see that it's better than 1-to-1. Okay? But this is an intraday look. Okay? So I go to my 5-minute and I ask myself, well, is my 5-minute starting to lose momentum? Why am I looking at a 5? Because if I'm trying to determine if my 15 has any bullish momentum to keep it carrying higher, it's going to be on the backs of smaller term time frames like a 5. So I start to wonder if the 5 is losing its uptrend, how much more continuation am I going to get higher out of the 15? Now remember, this is a counter trend trade. Okay? So I did mention, and I have a question here regarding for a retracement. And you know, it's a valid point. We made more than even a 23.6 of the last major move. Well, I guess that depends on what your idea of a last major move is. Okay? And I did pull this Fibonacci, I believe, in the analysis that I had made regarding what the Euro-US dollar might do. I might have done it on the Euro-Yen as well. So here's the daily chart. Here's the 23.6. Okay? Here's the 240-minute chart. There's a 23.6. Same last major move, okay? There's the last major move. I think most of you would agree that's the last significant, or the most recent significant sell-off, right? There's the 23.6. The 20% was absolutely, the 20-period moving average on the 240 was absolutely aggro, but take a look here. Look at what the 23.6 is overlapping with. Does that make sense? So, again, that's the last major move that I'll pull. Okay? And let me go ahead and activate. For whatever reason, I don't have the numbers printing on the 100%. So let's go fix that right now. At $percentage. And that actually puts that price right next to it. Alright, did I do that right? Apparently not. Oh, at percent. Oh, I did it backwards. At percentage $, and you can see the high that I pulled the Fibo from was 45.48. So, you know, if you're expecting a 38.2 retracement, and I'm not saying that's out of the ballpark, but if you're looking for that 240 swing short to be supported by something other than just the 34 EMA wave, this is the daily, this is the same daily Fibo that I pulled. Okay? Alright, so that's why, again, I still feel it's still a solid swing short. Alright? And I have a little less faith in the 15-minute. Alright, let me go ahead and pull up the power stats. I just want you to consider the rhythm of the trading day. And I'm going to go ahead and pull it up for, let's see, I'd like to pull it up for the Euro-US dollar. That would be nice. But I just want you to get an understanding of what it is that I'm talking about. So here's a the expected price range for the euro US dollar. Now you notice it's broken down by time frame. All right. I've got a high-low projection for the next 15, 30, 60, 240, and daily. Now this is what I was trying to overlay on the chart at the onset of our talk here, and having this overlaid really gives you another level of analysis in terms of important price levels and support and resistance. On a more general basis, this is something that I think a lot of traders need to understand, and this is the price movement ranges by hour of day. This is the rhythm of your pair. This is the rhythm of the Forex trading day. And this is something that you don't necessarily need to go to and look at every single day. But when you're trading a pair for the first time, or trading it for the first time in a long time, you want to reacquaint yourself with it. You want to refamiliarize yourself with how it moves, what it's capable of doing. Okay, so if I know that I'm still within the heart of the volatile hours of the euro US dollar, I need to keep that in mind as I build out my trading plan. Work that into my risk tolerance. Work that into my projected profit targets. Okay? So I love this kind of information because it's really different. It's not information that you get from, it's not a typical source of information, but it's a very interesting source of support and resistance. And as you can see, there's 3 ways I can calculate it. This is updated every 15 minutes, the expected price range across these 5 time frames. This is basically updated, I believe, on a look back of 6 months. So it's really a more general look at the personality of a pair, the rhythm of the pair. And then the movement per day is interesting. Okay, another reason I'm not that active on Sundays. But take a look here. It's insightful, but it's not something I refer to very often. I really focus on the movement per hour, and then I have the price range forecast overlaid on my MT4 charts. Okay. And that was what I really like having overlaid. And I wish I could have shown you guys here. We'll do it again. We'll be meeting again next week, so I'll try to pull that in. So this is what I'm looking at here, okay? As far as the setup, okay? And then when you want to add to that the Fibbo, and again, I drew it on that daily chart. You can see we used that last major move on the daily. And then I looked at that 240. You can see what's overlapping. The 20 period simple, yeah, where I took a taste, it rewarded me for a little while, but we've broken up through that. I think there's a pretty logical reason as to why we've broken up through that. When you start to look at, again, the optimism that's sweeping. It's amazing how the pendulum swings. We were so pessimistic on the euro. Anytime you start seeing too much negative news, anytime you start seeing just a barrage of things are going to zero, things are swirling the bowl, remember that that's usually right about the time the pendulum swings. Could the sentiment in the euro really been any more negative Friday? It was just crazy negative. The Greeks defaulting, and Angela Merkel's holding on to this EU with both hands, and the German court passed, it was just one after the other, and all of a sudden all I hear are calls for euro at 3,000. And I'm not denying that it probably could go there, but not today, not that quickly. At the pace it was moving lower, people were talking about it being there in a week. Give me a break. Things have to retrace. It's amazing how optimism comes after a severe bout of pessimism. Is this optimism going to be sold into? Absolutely. Just as I think any optimism in the equities market is likely to be sold into. Okay? So I'm not saying this optimism is justified in a way that I would want to start getting long the euro. Don't hear me out. That's not my intention to try to even do that. I'll take advantage of these corrections by doing what? By getting short. Okay? So that is our discussion for today. Thank you as always for joining me, and I will see you next week.